Welcome to the AACFB's 2021 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I will be your host. Our presenter today is Don Cosenza from North Mill Equipment Finance. North Mill is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their support of the organization. Before I introduce North Mill, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit them in the Q&A box and they'll be answered by the end of the webinar. If you run out of time before all questions are answered, I'm sure Don will be happy to communicate with you individually following the webinar. The entire webinar should take no more than 30 to 45 minutes. And for those of you who'd like to review this at a later date, it will be posted on the 2021 Meet the Funder page on the AACFB website, and it will be emailed to the AACFB membership. At this time, I'd like to introduce you to Don Cosenza. Don is North Mill's Chief Marketing Officer. He's responsible for leading the company's sales and marketing efforts with a primary focus on devising and implementing North Mill's growth strategy. Leveraging his more than 25 plus years as a marketing director, Don manages all branding, social media, business development, customer and broker relations, and product marketing initiatives for the company. Prior to joining North Mill, Don was Vice President of Marketing for United Healthcare, where he helped build the company's sales pipeline in the Northeast region of the country. He also worked for GE Capital as the e-commerce leader, where he introduced a social media strategy and improved operating efficiencies by deploying digital programs. Don earned his MA in economics from Trinity College in Hartford, Connecticut, and a BA in communications from the University of Connecticut. He resides in Cheshire with his wife and two children. Don, I want to turn it over to you. It's all yours. Thank you.
Thank you, Monica. Good afternoon, everyone. Thank you so much for joining our live broadcast. As Monica said, I'm Don Cosenza, Senior Vice President and Chief Marketing Officer for North Mill Equipment Finance, and I'm thrilled to be presenting what I think is my 7th Meet the Funder webinar. So time sure does fly. First and foremost, I'm thrilled to see such a nice response to today's presentation. This is actually the 4th webinar that North Mill has hosted this year, and in all cases, we've had a tremendous turnout. Folks are excited to hear what North Mill has to say, and we're even more excited to deliver the message. I'm going to do my best to keep the presentation, as Monica said, to 30 to 40 minutes so we can leave the remaining time open for questions. As always, if by chance we don't get to all the questions, I will get a copy of them from Monica, and I will get back to you within the next 24 hours with a response. That is a service level agreement that we always adhere to when we hold a webinar. So there's 4 sections to today's presentation. First, I'll spend a few minutes and introduce you to the what sets North Mill apart from other premier small ticket lenders in the equipment finance space. I know many of you work with more than one lender. We know it's very difficult at times to recall who does what, as similarities as well as differences abound. So my hope is to highlight what sets North Mill apart and ideally generate some new relationships with folks on today's call, because North Mill is accepting applications from referral agents. And then I'm going to dive in, secondly, to the various financial solutions and services that we offer, with a focus on those programs that have proven to be extremely popular and or have generated a buzz in the industry. And then I'm going to dive into our credit policies and rates, and I'll share some important details like one of our rate cards and the list of credit reports that we consider when structuring a deal. And then finally, I'm going to finish up with some actual deals that we've written to exemplify the types of transactions that fit inside our box. North Mill underwrites deals on many different types of equipment for a wide range of credit qualities. And after we go through a few deals, I'm going to finish up where I can explain how you can reach out to us and become a North Mill referral partner. So, for those of you who follow the news into the industry trades, it's really no secret that North Mill we're riding high. I mean, we've had a meteoric rise over the last couple of years. We had an incredible 2020, a year that for many companies was unfortunately riddled with bad news. Some of our competitors sadly stopped funding or issued furloughs or layoffs, and North Mill was very fortunate to not be plagued with any of those things. In fact, it was the best year in our history. We reported upsurges in volume throughout 2020 as the organization beat each of its prior high watermarks. We had set new records for our annual, quarterly, and monthly volume. As December of 2020 came to a close, we funded north of $183 million, which was an increase of 33% from the prior year. And so far, excitingly, 2021 is proving to be another excellent year for the company, an even better year. We announced earlier this month that our originations for the second quarter of this year exceeded a record-breaking $120 million. There was a new record also set for the month of June, as originations closed at just under 26 million, which was the best month in the company's history. Contributing to our stellar quarter, you may have read, was the acquisition of a $50 million portfolio of truck and trailer leases through an arrangement with one of our referral partners. The portfolio was debt financed through a new facility that we have with East West Bank. We've been with them for quite some time. Our traditional funded quarterly volume, if you will, through North Mill's referral network exceeded 70 million, in and of itself, another record, another quarterly record for the organization. And we also recently announced the closing of our fourth commercial equipment-backed securitization. And that was our largest ever. It was a $236 million issuance. And the transaction was really a game changer, and really demonstrated the confidence that the marketplace, the financial markets, if you will, having the ability of North Mill to originate and service a portfolio of quality small ticket loans and leases. And it really, I think it'll have a resounding impact on our profitability, not only this year, but in years to come. Plus, in other news, we continue to diversify our portfolio. For those of you who don't know North Mill, I've been with the company since 2014, and when I got here, it was a totally different place. We were really known as the lender of last resort, specifically for challenge credits, looking for Class 8 vehicles. And nothing could be further from reality in today's world. Transportation is still a very important category in our overall portfolio, but today it just accounts for a much smaller percent of our book of business. We do much more, and I will expound on the types of equipment we do shortly. And lastly, something else I really must point out is that North Mill is majority owned by an affiliate of Wafra Capital Partners. Wafra is an international investment firm. They manage billions in assets, and they deploy a variety of finance strategies now, including equipment financing. And quite literally, the relationship between our two companies pushed North Mill into a completely different financial stratosphere. It really gave us the backing that we needed to cement our place in the industry as a sound, financially stable, and premier equipment finance lender. We also opened offices earlier this year, satellite offices in Dover, New Hampshire, Irvine, California, and Voorhees, New Jersey, and we've added a bunch of new employees. And as always, I'm sure this will be music to Monica's ears. We continue to support the associations in any way we can. That includes all of them: NACLB, ELFA, AACFB, of course, and NEFA. So I always include this slide in the deck because I do think it's important to share the management team so you can see who's actually running the company. Some of us have been working together for years. As I said, I've been with the company since 2014. And we really genuinely are a cohesive group. We each bring our own skill set and experience to the table. On the far left, you'll see David Lee. He's our chairman and CEO, who many of you likely know personally. And I have to say, and again, this is something I also always say at every webinar that I deliver, I've been lucky enough to work with a number of senior executives in my career. And if there's ever a leader who you want in place steering your ship, it's David. It's really under his tutelage and leadership that we've made it through the COVID storm and are continuing to make it through the COVID storm. And we're not only growing, but we're growing at an exponential rate. And I have to give credit to David. He really is quite a leader. Next to David is Mark Bonanno. He was promoted earlier this year to president of the organization. Right in the middle is me, yours truly. I'm the chief marketing officer. And then to the right of me are Joe Latier and Bob Dion, two North Mill veterans who bring a wealth of leasing experience to the table. I think together they've been at the company for about 30 years. And then finally is Pierce Snyder, our company CFO. So I want to point out a couple of things on this slide, a few characteristics that set North Mill apart from the competition. And I say this in all of the marketing materials that I create and distribute to our referral sources. We really are an open book. We have a mission statement that there was a contest a couple of years ago to put the mission statement together amongst all the employees so that we could really identify what sets North Mill apart. And we all agreed that we're really built on a solid foundation of upholding the values of transparency, honesty, and integrity. And really, folks, we genuinely take this to heart. In all my years as a senior marketing professional working for companies like behemoth companies like United Healthcare, GE Capital, the Travelers, I've never seen a more committed professional and hardworking group of people, and I'm really genuinely proud to work here. Additionally, I have to say that we are 100% committed to the broker community. We do not go direct. We rely 100% on our family of referral agents to promote our portfolio of solutions. And in cases where even we get a call from a former customer looking to finance a new deal, we immediately see who that customer was affiliated with, as far as their broker is concerned, and we send that person right back to you. And the relationship we have with our brokers is critically important with respect to the feedback that you provide us. We are in regular touch with our partners, soliciting feedback on what we can do better as it relates to our products, our policies, and our procedures. And finally, I will be getting to this momentarily. We offer a full basket, as you can see on the far right, of financial solutions. Many of them I will highlight shortly. So we changed our service model last year. It was really in an ongoing effort, as far as we felt, to do everything we could to improve our customer service. We made what I think is a significant enhancement, really, to the way that we manage transaction flow at the company. We used to follow what's often referred to as a single point of contact customer service model. So that means just about everything related to your deal was handled by one person, your assigned account manager. But that individual was overseeing your deals really from the time that they were submitted until the time that they funded. But there were some inherent flaws by having your deals handled by just one person. So in order to improve that process, we thought it would be much better, and we've received really great feedback since the change. We replaced that single point person model with a functional service model. So instead of having just one person assigned to manage your deals, you now have a team of experts at the helm working to bring each transaction to the finish line more quickly and more efficiently. So if your account manager that you were working with has the day off or is out sick or the men's room or ladies' room, you don't have to worry about that now, because somebody will pick up the phone and your team of experts will work to usher your deal through the pipeline. I would say it's a few months, probably about 6 months or so, Northmill made the transition to eDocs. We did it in 2020. Many of our referral agents have been after us to deploy digital document transfer for some time. And it's worked out very well for us. And for those of you who remain unfamiliar with DocuSign eDocs, I think most people do know how it operates. But for those of you who don't, it really offers a host of benefits, and the customers enjoy it as much as the brokers do. Files travel electronically. eDocs just inherently are more convenient, as they can be accessed at any time on any device. Materials can be retrieved and updated with immediacy. And there's no need for you to forward eDocs to your customers or dealers as they get their own respective packages when we push out the doc package. Plus, you're notified as soon as documents are signed. So that in and of itself avoids unnecessary wait time, and it makes the whole transaction more expeditious. So we've been getting some great feedback on the e-docs that we put into place. Something else that I think really sets North Mill apart, I think it's pretty cool. It's our FAST portal. And FAST is actually an acronym for financing assets systematically through technology. And basically it offers what I think is sometimes referred to as in the digital world as a cool tool. First, you can submit your deals through FAST and you can track them as they make their way through the approval process. But secondly, you can leverage the FAST Deals tool, which is baked into the parent application. And FAST Deals really allows you to create multiple iterations of the same deal for your customer by simply taking your cursor, literally, and moving different variables that impact the monthly payment. So you take your cursor and you can move the bar that represents the term, and you can move the bar that represents the commission. You can move the bar that represents the down payment. And as you move the bar, you can see how it impacts that monthly payment at the bottom of the screen. And then you can save multiple iterations, as I said, of that deal. So in fact, it really improves your closing ratio because you can now offer your customer different options, different payment plans, if you will, on that same deal. And for those of you who don't feel comfortable doing it yourself, you can call in and somebody on your account management team would be happy to help you do just that. I wanted to make sure that I included a slide on our wireless GPS system as well, because North Mill does require that a GPS unit be installed on any asset that moves, which is why I wanted to make sure that I brought it up on this webinar. That includes all vehicles, so trailers, construction equipment, just any vehicle that moves. And there are some exclusions. You know, once you come aboard, we can review those with you. But generally speaking, it's anything that moves. And based on feedback from our referral agents and their customers, what we decided to do last year was convert to a GPS tracking device from a company called Pastime. And the device itself is called Encore. And it's really actually very slick. It almost looks like a credit card. It's very, very thin and it's wireless. And the benefit is that it can be installed by a layperson. So you don't need a mechanic. There's no screws, there's no bolts, there's nothing. You don't need to cut wires. There's nothing that you need to do other than just literally slip it in between, let's say, the door frame. And it then tracks the device. And it's compact, it's lightweight, and it lasts up to 5 years with battery life. I mean, quite frankly, I mean, it's the kind of thing I installed one on my teenage daughter's car because I wanted to make sure I tracked where she went. She didn't know it, but I did it. And it's that easy to hide. It's a great piece of equipment, and that is required, as I mentioned, with all vehicles that move. So now, kind of the fun stuff. What do we finance? So I like to say that North Mill is a one-stop shop in the sense that we finance many, 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 many different types of assets. As I said at the top of the call, we really focused at one point on transportation, specifically Class 8s, day cabs, and sleepers, but that's just not the case at all anymore. I mean, we still do transportation, and it still represents a big percentage of our, or a reasonable percentage of our portfolio. But taking a look at this list, we do so much more, and this is not even exhaustive. I mean, this represents the major categories, but it's everything from material handling to vocational trucks to industrial manufacturing, commercial printing. We're now doing franchises. If you can see off to the right, some of the newer categories. We do livery. We did last year, we did digital cinematic equipment. We did a cryotherapy chamber. I mean, so we do a lot of different things, and I will get into this as well in a bit. If there is a piece of equipment that you'd like us to consider once you become a North Mill referral source, contact your account management team. tell us about it. Tell us about the customer. Tell us about the equipment and how it's going to be used, what year it is. Just generally everything, that we can get our hands on so we can determine from an information standpoint, so we can determine whether we think it makes sense to underwrite. But very often we will consider a deal with equipment that we have not normally done in the past if we think that it meets our respective guidelines. There are a couple of things that you need to remember about the equipment when you send us a transaction. We do ask that the asset be revenue producing, which means it's really got to be essential to the obligor's business. And I think that's even more important now than ever before. The asset should have a low risk of obsolescence. Okay, and there really should be a secondary market for resale in the event that we have to repossess the asset. These two ads on the far right of the slide here, you're going to start seeing those. They're going to be dropping. I think we're going to send our first one out in 2 weeks. But it's just an example to all of our referral agents of the many, many different types of equipment that we underwrite. And it gives you a good idea of a little bit of background on the particular customer with respect to the FICO score, and a little bit more detail about the asset itself and the year that it was manufactured. It just will show you that there is a wide variety of equipment that we'll consider. And in fact, we do fund assets from A to Z. And then the first ad shows you that's a Zamboni Z on the far right. And we also, if you look at the donuts on the ad on the right, we do franchises as well. Okay, so I do want to take a moment and review the North Mill story at the highest level. It's really more of a reminder to any of you on the call who already work with us, but I know that many of the folks who registered for today's event are not familiar with us. So I think this slide represents some really important detail about who we are. And let me first start up by saying that if you notice the icon in the upper left-hand corner, it shows that we offer financing ranging from $15,000 to $600,000 in exposure. And that's actually something that's new for us. We just made that announcement within the last, I think it was the last 5 or 6 weeks, that we increased our maximum funding amount from $300,000 to $600,000 in exposure, which has been great for our referral agents, and many of them are taking advantage of it. We do accept credit qualities from A to C. We will go down to a FICO 550, which is really not necessarily a C credit, but we will look as low as a 550. But what's happened over the last couple of years is that our average FICO score has gone up, and it exceeded 700 a while ago, and I believe it's around 720 now. But that said, we will consider transactions for customers who have a lower score than 720. But the nice thing is that that's why I say we're one-stop shop. We never really had the rates or the wherewithal or the ability to finance different types of equipment that allowed us to have an extensive band of opportunity with respect to customers. We were very limited at one time to the lower credit scales and in the transportation space. And as I said before, that's really changed. Something else I think that's worth noting on this slide is our commission schedule. We do pay up to 12 points in commission. And for most of our rate cards, we do allow the commission to be baked. Actually, I take that back. For all of our rate cards, we allow the commission to be baked into your customer's monthly payment stream. So that makes it a lot more affordable. At one point at North Mill, it was required to be included in the down payment, your commission, and that made it very difficult for some customers to come up with that kind of down payment. So we made a change a few years back, and we made yet another change where it's now included in the stream of all of our rate cards. And then lastly, I just want to reemphasize what I said earlier about us being referral agent centric. We consider our referral agents as true partners. You are our sales force, and we grow together as as one. So this next slide offers you some insight on some of our key programs. We do have an app-only program up to 150. So deals that fall between 15,000 to 150,000, which really represent most of our transactions. They're part of our application-only program, and all we require is a signed credit application to pull history and a spec or an invoice on the asset, so we can get a better idea of what exactly it is that they want to finance. And for larger size deals that fall between 150,000 and 600,000, they fall into our Application Plus program. And in that case, we do request customers' financials, and that would include things like tax returns and the last 3 months of bank statements. Secondly, we do offer a full series of loans and lease options. We have loans. I'm going to talk shortly about our EFA program. We offer tracks, we offer FMVs and buck outs. So we do have a complete line of financial solutions to meet your customers' needs. Thirdly, private sales. When I first got to North Mill back in 2014, that was anathema. I mean, nobody would even utter the words private sale, but we did a lot of customer assessment, and we did an analysis of the marketplace, and we contacted many of our referral agents, and we identified that was a niche offering, and one that not a lot of lenders were offering at the time, and still don't. So we decided to implement a program for private sales, and instead of your customer purchasing an asset from a dealership / vendor, now he or she, through the private sale program, can procure the asset from typically another end user. And with our program, only loans are available, leases are not. But there's just a number of benefits associated inherently with private sales. The customer, excuse me, can leave a dealership out of the equation entirely. Often buyers think they get better pricing without the dealer involved. Certain assets are just not available through a dealer, only available through a private seller. And often people like to buy from somebody they know. So it really is, it's an opportunity for you, if you do become a North Mill referral source, to differentiate yourself further by offering your customers a private sale. Also, a refi finance cash out. I've actually dedicated a slide specifically to that, so I'm going to talk about that in a bit. But suffice it to say, it's an outstanding program, and I'll explain the benefits better. It's a working capital alternative. And then last on this page is our 1010 program, and you're going to see an ad that's dropping tomorrow. It's actually an e-campaign, as its name implies, for new and recent vintage vehicles. So that would be units from 2021 and 2020. We cut it off to 2020 just about a week ago. North Mill will offer a 10% reduction from our rack rate and a 10% reduction in the down payment than what we would normally offer in this case for a new or recent vintage asset. So in effect, you're saving your customer 10%. And that's exactly what the ad campaign talks about. And the headline reads, you can save your customer 10%, and here's how. So it may behoove you to work with your customer and choose an asset that is newer than one that's older, and they will find that it is much less costly for them to finance. This next page, I want to mention our additional collateral at the top of the slide. So customers who own an asset free and clear can pull equity from that asset and use it towards down payment. And again, this is especially helpful when a borrower is having trouble coming up with the cash needed to meet that down payment requirement, because they often have assets that they own free and clear, and they can leverage that ownership and use the proceeds towards the down for another piece of equipment. We also offer placeholder approvals. I used to get asked that question all the time. So we finally decided to offer them. And what we will do is we'll formulate what we call a pre-approval for customers who haven't yet chosen an asset to finance, but the customer does know that he or she is going to need a certain type of equipment within the next 60 days. So we will issue a sample approval based on the expected asset and the general idea of how much that asset is going to cost. We look at their credit background, and then we put together, based on that information, what I said is what we call a pre-approval. And it's a significant benefit to our referral sources, because it really affords you the opportunity, as is often said in this industry, to take the deal off the street before somebody else can take ownership of the transaction. And customers sometimes need a little bit more time to make up their mind before they determine exactly what piece of equipment they want. They just know they need it. So this placeholder approval is a great option. And then the last two things, again, are so important that I have slides dedicated specifically to them. Truck Master Warranty, which I'm going to talk about shortly, and our new North Mill loyalty program that kicked off in April. I wanted to be sure to include this slide in the deck. Again, another important slide is it's really another key differentiator for us at North Mill, and it impacts another product that I'm going to talk about after this, which is the cash out program. What really makes North Mill's early payoff policy so popular is that the premium charge is on the principal only, right? So that's not what's considered typical in the equipment finance industry, as many, if not most, lenders charge a premium on both principal and interest. Plus, early payoff is designed to reward those customers who make on time and regular payments each month, so they can pay off the loan without premium or penalty after 18 consecutive months of timely payments. We only do offer this program when we write the deal as a loan. But to exemplify, here's how it works. So in year one of the loan, let's assume that less than 12 monthly payments have been made. There would be an 8% premium charged, again, on the outstanding principal balance only. In year two, let's assume in this case that there have been fewer than 24 payments made. A 4% premium is charged on the outstanding principal balance only. Year three, if there were fewer than 36 payments, there'd be a 2% premium charged on the principal balance. And then finally, as I just said, on 18 consecutive months of on-time payments, there is 0 premium charged on the outstanding principal balance. And we do have customers, many customers, who take advantage of that savings. And your North Mill account manager, once you come aboard, can explain more on the early payoff policy and how you can sell the benefits to your customer. So another key differentiator for North Mill, and the early payoff policy comes into play here, is the fact that we offer both a standard loan and an EFA, an equipment finance agreement, when a deal is approved as a loan. So whenever your transaction, your customer's transaction comes through to us and we say, okay, it doesn't have to be a lease, we're going to do a loan, we automatically offer a loan and an EFA option. And you can sell both options to your customer and make a recommendation on which one you think makes most sense based on your customer's needs. And for those of you who don't know, or who don't know, an EFA is really quite similar to a loan, but does not include, in our case, the ability to prepay before the end of the term. Only our loan includes the opportunity to prepay. But the good news is, when a transaction is approved by North Mill as a loan, not only can the customer choose between these two, they're going to enjoy a lower monthly payment with the EFA, or if they don't want the EFA, they can enjoy the benefits of early payoff with the loan. So one includes early payoff, one does not. The one that does not is the EFA, and that is less expensive and offers a lower monthly payment, about 10% lower than the loan. So in both cases, you're offering your customers options that they can choose from, and will do so based on their specific needs. And we find that really depends on the customer, but a lot of customers will opt to take the more expensive loan just because they want the peace of mind guaranteed that they can pay off that loan early early in the term. We've also developed a broker tool to help you sell the option to your customers. And you can actually show them the aggregate savings in a side-by-side comparison. It's in an Excel spreadsheet. It's very easy to use. And you can demonstrate right for them online by sharing your screen how it would behoove them to take one option over the other. Another program that I think is a big differentiator for us is, we still do transportation. We do our share of Class 8s. So we offer a truck master warranty, and it's actually a program designed specifically for North Mill by a company called Specialty Administrative Services, in order to better protect your customers from unexpected large repair issues that are just inherent on used trucks. We do require that the warranty be included on all units financed with 350,000 or more miles. So if a Class 8 has 375,000 miles, it must have a truck master warranty included in the deal. And a complete listing of what's covered under the warranty can be found in the North Mill Referral Agent Handbook. And I'm going to talk about the handbook at the end of the presentation. I think it's getting close to 70 pages long. It's a very, very detailed, easy to use manual that covers everything you need to know about doing business with North Mill. And there is a section dedicated specifically to the truck master warranty. So cash out. We've been advertising this heavily. For those of you who regularly read leasing news or we're now appearing in Debanked, we have a program called Cash Out. And basically, it's a working capital solution. It's an alternative working capital solutions. And we know businesses need working capital to remain afloat. But sometimes companies find that that difference between assets and liabilities is really not sufficient to maintain their daily operations. So they need to bridge that gap by financing working capital. And there's so many different ways that a customer can do that. Most of you probably know of some of those, including merchant cash advances, or revolving line of credit, accounts receivable factoring. I used to work for GE Capital in one of their factoring businesses, so very common. And while all of these transaction types provide cash flow, they're really not created equal. We really feel at North Mill that the cash out product stands head and shoulders above the rest. And as a referral agent who works with us, it's one more tool in your financial solution set, along with some of the other things I talked about, like our 1010 program and our private sales and our app only and our app plus program. So it's just another great solution to offer your customers. And simply put, it just allows borrowers to pull out the equity from paid up business equipment and then channel the proceeds back into the company, right? So it's almost like a home equity loan, but you're using a piece of equipment. And it's very similar in concept to a sale leaseback, but our cash out is structured as a loan. So all the benefits associated with the loan are in effect, like that early payoff policy. Some of the other benefits include, very competitive rates, typical MCA products, their borrowing costs, when you take into consideration the fees and the interest, can be, 40% on up. North Mill's cash out is a much more cost-effective alternative. Terms range up to 60 months. And again, typically with an MCA or factoring, you're often limited to, 18 months maximum, where, again, we go up to 60. There's monthly versus daily payments. I mentioned there's the early payoff policy. It's not tied, the product is not tied to accounts receivable, invoices, or credit card sales, as is often the case with those other programs. There's no restrictive covenants. And what is also very beneficial is the equipment, albeit it's being levered and allowing the customer to pull the equity out to use proceeds elsewhere, they can still use the equipment. They don't lose sight of the equipment, and they don't lose access to the equipment. They can still use it and that remains uninterrupted, which again is a nice feature. And it's a very flexible program because your customer can use the proceeds for working capital, or they can apply the funds as a down payment, as I was talking about earlier on another transaction to refinance existing equipment. So another product that your account manager can tell you much more about. And actually, before I change slides, so in looking over to the left-hand side of the screen, just as an example, if assuming the customer is looking to pull equity out of a piece of equipment that has an assigned wholesale value of 100,000, just to make it easy, using easy numbers, given that we may structure the deal with a loan of value of up to 140%, the customer could potentially receive a loan then for $140,000, which, by the way, is inclusive of your commission. So your commission would be subtracted from that, but that's still a nice chunk of change to be able to pull out of a piece of equipment and use for other business purposes. So this was really kind of cool, and I was really very excited to announce this back in April. We had a loyalty program once before, but we stopped it because we didn't see as much participation as we had hoped. So we put our heads together and we thought, what could we do to really get our brokers excited about using North Mill more than their other lenders, and leveraging the fact that they would be sending us so much business? What could they get out of that relationship? So really what this is, it's a bonus scheme that offers approved North Mill brokers an opportunity to earn a quarterly payout or bonus above and beyond commissions paid on closed business. So I wanted to take advantage of a really upcoming the upcoming baseball season. And so the program is called Triple Play, because the optimal result is for the participating brokerage to meet or exceed 3 separate metrics that we use ourselves to measure our own productivity. So while the ideal outcome is for a participating broker to make a triple play and reach all 3 stated goals, the advantage of the plan is that a bonus is granted when a broker makes a double play by meeting or exceeding 2 out of the 3 metrics, or even a single when they meet 1 out of 3 goals. They still earn a cashback bonus. And this is basically how it works. As a private lender, we use 3 primary metrics to gauge our efficiency. So we look at all of our brokers' submissions, their approval percentages, and then their funded volume. And so we thought, you know what, let's use those same metrics as part of our loyalty program. So if you, as a broker, increase your submission rate, improve your approval percentage, and increase your funded volume from a quarter prior, you will earn up to 1.5% of your total volume for that quarter. And we had over 40 brokers who were eligible to participate, and the majority of them placed. And we wrote checks as high as $62,000 to brokers who managed to get all 3 of those goals. And we were really excited to see such active participation. And the feedback that we've gotten has really been stupendous. And we redeployed for the 3rd quarter. And what we do is we want to make sure that everybody is aware of what's going on. So we update on a monthly basis where you are in the process. And I'm looking at the clock here, and I think I better speed it up a little bit. So let me just talk a little bit about our rate cards. As I mentioned before, North Mill, we're a small ticket finance lender, and we fund deals between 15 grand and 600 in value. Those of you who do business with us know that we do offer 2 sets of rate cards. The credit worthiness and the business experience of your customer plays a key role in how we structure each deal. Generally, our A cards are designed for customers who have at least 2 years in business and fewer challenges with their credit histories, while our B cards are for those who have less than 2 years in business and credit histories that are not as clean. As it relates to credit in general, we consider many other variables when we make a decision. We look at everything from the last bankruptcy to a foreclosure to repossessions to the number of derogatory comments on the bureau. Does the customer have comparable credit in the past or currently, how many trade lines do they have open, obviously what their FICO score is. So there's a number of things, many of the things that banks look at and other lenders we also consider. We have the A card, we have an A set of A cards and B cards. The A cards and B cards are further categorized by equipment type. So we have a set of cards for vocational trucks and other equipment. We have a set of cards for over the road, specifically for sleepers. We have a card for trailers and machine tools, and then we have a card for construction equipment. And here's an example of one of our cards. And again, for those of you who follow us, you'll know that we just made an announcement this month, just about 2 weeks ago. We lowered our rates across the board by as much as 150 basis points. So it's a significant drop. And our construction card, as I'm showing here, is the best card in the sense that it offers the lowest net yield of 7% for a tier 1 deal. That rate is actually even lower when we leverage the 10-10 program that I talked about before, the new or recent vintage equipment. So that rate goes down even further. A few things to note, as I said, this exemplifies the 10 tiers that I was talking about. And you'll notice that in tiers 1 and 2, there's 100% advance rate. So there is no down payment. So in some cases, North Mill does not require a down payment for your customer's transaction. And that's important, I think, to note. And this slide is just to demonstrate the fact that there's an inverse relationship between the credit quality and the yield. As the credit quality goes up, the yield goes down. And this is a list of the different things that we consider that I started to list off a few minutes ago regarding the different credit variables. As we assess a transaction, we look at all these different things. And we have, in some cases, limits, low limit and a high limit for some of these different variables. And your customer, depending upon how they score and where they fall within that range, they will receive the correct tier on the correct card based on the equipment for a particular deal. But these are all the different variables that we consider. We do get asked all the time which CBR we use, and we do pull from Experian, but we also, when available, consider PayNet. We do our background check in Google. Of course, we look at UCC filings, and we use TransUnion's TLO program for credit profile. So I do want to mention, this is one of the last slides. Performance metrics, right? So our goal at Northfield really is to empower all the referral agents with whom we work by providing the ability to fund more transactions quickly, easily, and digitally. And that said, we did implement performance metrics last year. And the whole thought was that we genuinely want to develop long-term mutually beneficial relationships with all of our referral agents. But so we're not looking for somebody to be classed as a one and done. They're looking to send us one deal because they only do equipment finance, so they work with equipment finance tangentially, and they focus on real estate. That's not necessarily who we are, and we wouldn't be the right fit for them. So we're really looking for referral agents who focus on equipment finance and who really believe that they can work with us and send us about $150,000 worth of business every quarter. And that can be, one deal for 150, or it can be 3 for 50, it can be 1 for 100, 2 for 25, whatever it may be. But really, we would hope that, generally speaking, that we would earn about $150,000 of your business a quarter. We're not going to necessarily shut you off if you don't, but what we're trying to avoid is bringing on brokers who are going to send us that one deal and we don't hear from them again, or the broker who sends us 60 deals and closes 2. So we really want to make sure that we're the right fit for you ultimately. So I'll finish up by just showing you a couple of deals here, giving you an example, some examples of some deals. So this is an A deal for construction. So this particular customer story, the customer had been in business for 20 years. They owned a construction company that really focused on the housing market, and they were looking to expand the business, and they had to purchase an excavator because they had just won, I think there's a couple of contracts. So we looked at their background. They had a 762 FICO. You see in the middle of the slide, as I said, 20 years TIB. They did own their home. There was no mortgage, so the home was owned outright. They had strong cash and repayment history, and they had 81% revolving repayment. And they did have comparable credit. So they had funded something in similar range in the past. So we were able in this case to give the lowest buy rate, which was, as I said, 7%. That's the lowest rate we have on our card. The commission was 11 points, the term was 48 months, and the monthly payment was $2,200. Here's another example, here's another A example. This customer had been in business for almost 30 years. They had a couple of Class 8s. They had a day cab and a sleeper, and the customer was looking to sell the existing sleeper and purchase a new one. And our relationship manager recommended the 1010 program. And I believe they went from like a 2018 to a 2020. Yeah, it was 2020 model year. And based on their 775 FICO, their 28 years time in business, the fact that they did not own, that they owned their home and there was no mortgage, they had significant revenues and very few derogatory comments. There were obviously other things in the background, but it did allow us for this particular customer to give them a 9.5% buy rate, and they were eligible for that 10% discount that came out to a little bit more than 8.5. The broker earned 7 points. It was a 60-month term, and it was a $3,100 monthly payment. And then I do want to give you an example. Let me, I'll go back up. I'll give you an example of a B credit. So this particular customer was experienced business owner. And they were purchasing 2 new assets with excellent resale value. This particular customer had a 650 and a 649. There were 2 PGs. There were 2 personal guarantors. So we do take into account both FICOs. They had almost 30 years time in business. They had repaid a significant portion of their corporate debt. Their mortgage had positive equity. They had 85% revolver availability and very few credit inquiries, though there were some negative comments on their CBR. But all in, we look at the information in total. We were able to give this particular customer a rate of 12 3/4. The broker earned 8 points on a 60-month term, and they chose the EFA, by the way, the 10% less expensive option. And then this is one more I'll share with you. As a borrower had 6 years time in business, and they had 5 years left on a 15-year mortgage. They had 68% revolver credit available and comparable debt. And this particular customer had a 671 FICO with 6 years time in business. They also were a homeowner, but only had 5 years left on the mortgage. And they too, like the other customer, had comparable debt repayment history. So we knew that they'd done it once before, they could likely do it again. This particular customer landed a buy rate of 9.9. Again, this was the EFA option. The commission was 9.5%, and the term was 60-month on a $1,500 monthly payment. So finishing up now, I want to share with you that we are very, very keen on communicating with our brokers, and we have a whole series of materials. I mentioned earlier that we have a close to a 70-page broker handbook that you see on the far left. I think that you'd find that very, very helpful. It's a PDF, so you can click on the task or the subject that you're interested in, takes you right to the section in the book. We constantly push out e-notifications. We have a whole series of quick guides, so you can tack them up on your bulletin board so you can quickly see what our rate schedule looks like, your commission schedule. And we have a newsletter that we send out every month. And we often reiterate important news, like the one that just went out 2 days ago, talks about our lower rates and the fact that we lowered as much as 150 basis points and that the rates were lowered across the board. So how do you become a North Mill referral agent? We are accepting applications, as I said at the beginning of the presentation. You can go right to our website, nmef.com, northmillequipmentfinance.com, and click on Become a Referral Agent. And there's a one-page application. It takes but minutes to complete. We do ask for a lender reference, so another lender that you're working with. We do ask that a form be filled out just to prove that you are working successfully with another lender. It doesn't even have to be a lender in the equipment finance space, just another lender to vouch for you. And if you're not sure and you'd like to schedule a one-on-one call, every one of these webinars, I end up getting quite a few visits scheduled, where you can simply go to our website, the homepage, nmef.com, and scroll to the bottom, and you'll see those 3 mugshots there. And you literally just click on one of them, and it takes you to a calendar. And you can choose from different times to meet one-on-one with any of us, and we'll answer as many questions as we have to, and we'll share the North Mill story with you on a one-on-one basis. So I'd be happy to meet with anybody on this call who'd be interested in perhaps working with us. And of course, you can always call or email us at any time. So that's it. I'm sorry I went over my time. I got a little carried away, but I guess I can leave a few minutes open for questions. Monica?
Yes, if anybody has any questions, put them in the Q&A box and we'll try to get those answered here real quickly. I know there's one question of, do you fund logging equipment?
We will consider that. Yes.
Great.
Yes, we will.
So we'll
I do have another question here, Monica. Do I need a California lender's license to work with North Mill? No, you don't need a California lender's license to work with North Mill, but if you don't have the license, we have to write your business for residents in California as leases. So that's just an important distinction. The company can use loans for residents of all other states, but it's really better to have the license, as your deals won't be limited to how they're structured. So it's a good idea to do that. Do you have any more?
I'm not seeing any right now. As we mentioned at the beginning, if anyone has any questions, you can reach out to Don directly, and I'm sure he'd be happy to answer them offline. Let's see. I'm seeing.
Oh, I see one, Monica. Just came through. Will North Mill finance startup businesses? So yes, one of the guarantors must have a minimum FICO of 650 or above, and they have to have 3 years of provable industry experience. So we absolutely will do startup businesses.
Great.
I think that's all I see. I can't see the rest of them.
I know sometimes people put questions in the chat and sometimes they put it in the Q&A box. I don't know if you're able to see the Q&A box.
Yeah, I think I've gotten them all.
Okay. Well, we are running a little long on time. So if anything is in there, we will find it and have it answered offline. And I want to just wrap this up and say a big thanks to all the participants, and especially our valued funding source and gold sponsor North Mill Equipment Finance. Thanks for a great job, Dawn. We look forward to having everyone at the next Meet the Funder webinar. We invite everyone to meet with North Mill in person at the AACFB annual conference coming up this September in Nashville, Tennessee. Thanks again and have a great day.
Thank you, everybody.